And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Monday, everybody. Welcome to the market forecast for Monday, July the 11th. I'm John Hoagland. Thanks for trusting me with your time. I hope you had a good week next week. A big thank you to our good friend John Doherty, JD, the Dancing Bear, for taking care of everybody last week. I had a really nice week. It was hot. It was 100 degrees and very humid every day, but we had the lake and we had the pool and we had some rum to help cool everybody off for the week last week. Great people. My kids were there. They had friends there. Our hosts were always, as always, very hospitable, and it was a really good time. It was good to get away, and it's also good to get back. I've done some considerable research over the last couple of days, including this morning, to be prepared for the markets today. I see you guys took good care of the markets while I was gone, and I appreciate that, of course. And we're looking forward to, as always, seeking accurate context, thinking about and using good risk management, and always staying patient in our activities here. Today is National Pet Photo Day. I'm not going to give you a picture of Lacey. Maybe she'll stop by and give us a cameo later on. We'll have to see about that. But as far as economic numbers this morning, we really have nothing on the docket. A couple of short time frame bill and note auctions tomorrow. A lot of the same, just not a lot of information. We've got a couple of talking Feds today later on and around noon tomorrow. We don't really get into the economic numbers until we get into Wednesday, which we're going to have our CPI number at 7:30 Central. That's going to be a biggie. Of course, the EIA Petroleum Status Report. And then the Beige Book at 1 o'clock p.m. Central on Wednesday. That lets us know, usually that's just a marker. FOMC meeting is going to be 2 weeks from this Wednesday, so we're going to be looking at that again already. As far as Thursday is concerned, as always, jobless claims. We also have PPI final demand on Thursday and nat gas. Some short-term bill auctions and bill announcements on Thursday, and then Friday we're going to wind up with retail sales 7:30 Central. Alongside that, the Empire State Manufacturing Index and import-export pricing. We do have a talking Fed on Friday. Bostic is going to be speaking early in the session. Industrial production, business inventories, and consumer sentiment. All of that on Friday. So starting off the week with some rather quiet economic information. We are beginning earnings season this week. I think on Wednesday we have some of our major banks kicking off the earnings season for us for the second quarter here. I guess, as I'm sure we're probably all aware, if we're keeping track of the news, I think everybody's talking about it. I guess Elon Musk has pulled out of the Twitter deal. Now Twitter is going to probably sue him for $1 billion in a break fee. That's going to be something that I think is going to be litigated for a very long time. We're going to be seeing that for a while. It doesn't really affect our markets unless you're trading Tesla or the Nasdaq, but it's going to be an interesting situation. U.S. stocks are set to open lower ahead of vital inflation info later this week, looming continuing rate hikes in a couple of weeks. Again, earnings season begins. Crude prices are lower as we enter rollover. Rollover is scheduled for Friday, the 15th this week. If you're trading crude oil, you certainly want to be well aware that we are in rollover. We'll see if that affects the market through the week this week. As we kind of think that rollover is going to create potentially more range-bound opportunities. Doesn't always happen that way, and with the president going over to Saudi Arabia this week, just about anything can and will happen. As always, our acronym here on the market forecast is ACH. Anything can happen. China, I guess, is increasing COVID lockdowns, saying they may have identified a new variant of the most recent variant, the Omicron variant. I think is the one that they're saying that they found a new variant of. As far as the VIX, the dollar index, and the 10-year yield, I was really kind of surprised to see the dollar as strong as it has been for the last week. We've got the VIX up about 7% this morning, 26.42. Not a big number, but a pretty big percentage number to the upside as our equities continue to try and push to the downside. We've got the dollar index 107.76, up about 0.75% this morning. Last I checked, and the yield on the 10-year down to about 3.04%, a little bit lower this morning. As always, make sure you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome here on the Market Forecast, the Market Recap. Make sure you subscribe to our YouTube channel so you get notified when we do go live. A couple of announcements. We do have our strategies class Monday, Tuesday, Wednesday, and Thursday. If you haven't joined up, please feel free to join up. But it is going to step on group coaching this week. So today we're not going to be able to have group coaching. We're going to be in the strategy session. Tomorrow morning, of course, we will be having Make Hogue Money. And then the second session of the strategy session tomorrow. Again, no group coaching on Wednesday because the strategy session is going to step on that. And then, of course, Make Hogue Money again on Thursday. Looking forward to seeing everybody. Looking forward to having a good and profitable week. Got to say good morning to everybody. We got Tachyon first in the room. You win the prize, Tachyon. James, good afternoon to you. Shaw, it's good to be back. Rick, my brother, love you. It's good to be back. Yes. Theo, good morning. Manuel. Charles, yes, we did enjoy our vacation, and it is, as always, it's good to get away, and it's good to get back. I'm going to keep telling myself I've done considerable research. I think I'm well in tune with the markets, but being a Monday and a Monday after a vacation, I'm going to have to remember and force myself probably to remain patient today. My guy Vince, good to see you. Scott saw and he conquered. Excuse me. Dimitar, good to see you. Chilling with Dylan. Morning. Hopefully trading has been good for everybody. ZK, as far as I-bonds, I think they're fantastic. I know a lot of people are big fans of them. It's a flexible rate bond that's basically providing about 10% on your money right now. There are some rules to it, so make sure you're well aware of the rules around it. But I think it's a really, really interesting investment in short term for the time being. Dr. VJ, good to see you. Brian, John Doherty, thank you so much for taking care of all our people while I was gone. John, you are fantastic, and I really appreciate you. Dan Trader, Patrick, Frederico, Rusty Golfer, my spirit animal. Bill, good to see you. Alfred, Sarah Hall, good morning and prayers and love to you as well. Grim, Reaper Trader, had a great vacation. I print money. Terry King, Thomas W. Jerry is awake. Hopefully John is too. Glitter Sandwich, good to have had a great vacation. George. Lacey, George says hello. You may have to come up here and say hello. Sarah, thank you very much. Jerry is awake. Yes, JD is great, isn't he? Marcelo, Haji, good morning. Inicus, I'll quote today. Let's see. Improvement is not about doing more right, but it's doing less wrong. I really like that, Inicus. Something my mom always used to tell me. Wealth isn't about having a lot, it's about needing a little. Kind of along the same lines there. Chris Johnson, good to be back. Stephen, Rob T, thank you very much. Dan, good to see you. Equities market feels too high to buy, yet too low to short. Well, then sit on your hands and wait for something to come to you. we know we can always find and manufacture opportunities. Excuse me. A little tickle here. Let me have a cup of coffee. ZK, can you drop the link to sign up for me? Let me see if I can find that for you. Let me get that for you. Give me 1 second. Okay, here it is. This is the direct link. You may get mad at me for doing this, but here it is. Here's the direct link. You'll be signed up. We'll see you at 12:30. The strategies class begins. Yeah, I was going to say that, Chris Johnson. Dan Emmons, it's good to see you again. I think I saw... I think I saw you in Slack or something. Excuse me, on Discord, talking about maybe some success that you've recently had here at Top Step. We'd love to hear about that, of course. Melk, good to see you. ZK, my pleasure. All right, so we are coming around to 8 o'clock pretty soon here. What else do we have to discuss? Lacey, come here, girl. No? She got an itch first. Come here, girl. Come on. I want to say hi. Come on. Come on. Come on. There she is. There's Lacey. All right, there she goes. Fast as she was there. Jack, usually, unless I'm on vacation, I did not do anything. For 1 to 3 day trades, what time frame would be the best to use, Hogue? The question, David, is I gave her some head pats for you, of course. Yeah, she's a good girl. She's a very, very sweet girl. A bit of a rascal, though. So, David, for 1 to 3 trades per day or 1 to 3 day trades, like you trades you're going to hold on for longer. That's the question. For me, as a day trader, David, and this is, again, just for me, I stick pretty far away from anything shorter than a 30-minute chart because I'm using the market profile, which is based on, in essence, the 30-minute chart. There's a million ways to skin a cat. Just speaking from where I'm sitting, I'm looking for... when will she take over the show? Lacey, they want you to do the show. We'll work on that. All right. Let's jump into the charts. Let's start the week off on a good note. If you're already in the markets, I'm certainly hoping that you've got the markets heading your direction. Let's take a look. So here's the S&Ps. Now, Sunday night into Monday, I'm always looking at the longest time frame charts. We've got the monthly chart, we've got the weekly chart, we've got the daily chart, and pretty much all those time frames are really looking at this market and holding downside structure. We can see off the high here relatively consistently. We're putting in lower highs, we're putting in lower lows, so we still think that the market may have more legs to the downside. But of course, it doesn't happen in a straight line. So what we're looking for is opportunities in shorter time frame. But in looking at the longer time frame, we can get an idea of the side of the market, or if we are going to be choosing a side of the market with which to operate from. So with all time frames still looking lower, overall, I'm still thinking that there's some continuation and that our low is not in yet. But of course, we can't predict that. All we can do is react to the information that the market is providing for us. So in short time, Short time frame, I think that this market has really started to come into an area of balance. Now, this area of balance is, of course, going to be the market looking for new information. Do we need to push this market lower? Is the low in? Are we going to continue higher? All of this information is, of course, unknown. So, looking at what we've got here, we've got this purple line is last week's high. The purple line down below is last week's low. It's even though the low from the previous week. And the previous week, we didn't go too far from last week's high. So the market seems as though the market is kind of finding an area that it's kind of comfortable doing two-sided trade, which means that we're probably going to be looking at shorter time frame levels with which to look for our opportunities. It also says that we're going to be able to trade both sides of this market. When we get up near the high of balance, we'll be looking for shorts, and near the low of balance, we'll be looking for longs. When we're nowhere near that, we're looking for opportunities near short time frame levels that short time frame traders use and will look at to provide opportunities to limit risk. Now, we know that we've got the FOMC looming in 2 weeks. We've got GDP numbers coming later on in the month. Excuse me, I do apologize. So we know we have earnings season starting this week. So there's a lot of pending information out there that we're going to wait and we're going to try and respond to, and we're going to try and use as our information that we're going to be adding to the things that we look at and that we use to find good opportunities. So what does that mean? Well, we've got an idea of what we think the market is doing in the longer time frame. So we're going to look into the shorter time frame, 30-minute chart here. And we're going to just see what we're looking like in short time frame. So we know that yesterday, Friday that is, we had an additional 7,100 estimated open interest come into this market. Okay, well, we had a P-shaped profile the day before. We've got 2 days of delta divergence. In other words, delta is decreasing in value, indicating more aggressive sellers hitting bids, but price moving in the opposite direction. We had the same thing on Friday. We had price attempting to move higher and delta decreasing in value the entire day. Well, on Friday, it makes sense that if we sensed we had longer time frame buyers just picking up bargains up here against shorter time frame sellers, we should see an increase in open interest, which we did. But how good of a job did the market do? It did a better job on Thursday, not as good a job on Friday. And it looks like there is a weak high up here. It is not a weak high. There is a small degree of excess at the high from Friday. Not a big amount of excess, but we don't have huge excess at the low either. Settlement, 39.01 quarter. So, okay, 39.01 quarter. We got 2 ticks from the overnight high at that level. The market opened here, and it's been largely pushing lower. So we've got some overnight inventory in short time frame, overnight, weaker hands, smaller retail traders holding shorts coming into this market near the low of the range from Friday, near the low of the range from Thursday. This offers opportunity for us down here. Our overnight low and the lows from these 2 sessions down here do offer some opportunity, and it looks as though we're not going to be opening with a gap. So I'm going to try and stay patient because we are opening in range, in value. I'm going to be focusing on anything lower, finding short time frame levels with which to target. We don't have a gap. We have a naked point of control down here. We've got another naked point of control down here. And then last week's low is all the way down here. It makes things a little bit more challenging, I think, when we're in the situation that we're currently in. In short time frame, we can see we've been putting up higher highs and higher lows, but in the longer time frames, we can see that we've got lower highs and lower lows. The longer time frame usually wins. So I'm going to be, excuse me, I'm healthy. At least I think I am. But I got this tickle. A little more coffee maybe. So I apologize. Yeah, the purple lines. Yeah, I can say the, all right, here's last week's high in the S&P. 39.22. Last week's low. And to be exact, 37.44 even. So we're going to be looking at, I think, a morning where we're going to say, are we going to stay in range from the last couple of days, or are we going to look lower? If we do find continuation in volume to the downside, I think there's some pretty decent visual opportunities for us to look without really even breaking upside structure in the short time frame. There's no economic numbers today. Nothing really tomorrow. This week really begins on Wednesday, so just be cautious. Be careful about that. Gold. I'm sorry. Crude. My goodness. All right. Last week's high, 111.45. Last week's low, the following day, 95.10. Remember, we're coming into rollover. Rollover has a tendency to keep traders, to keep the longer time frame traders out of directional activity. They're looking for a cheap way to get their rollover done. So they try and work their rollover because they can make money. They can make a lot of money during rollover just rolling those contracts over. And we all know how deep the crude oil market is. Okay, so we're centrally located between weekly kickoff high and low, between last week's high and low. We're in this area of balance that we were in basically from March through May. And this may, provide some gumminess in this area. We're in weekly balance. Again, the schedule for rollover is on the 15th. like everything in trading, nothing is finite. We do know that the president is going to Saudi Arabia to see if they can provide more crude oil for us, which we're perfectly capable of providing for ourselves. Lacey, easy girl. We got a opening range trade here, it looks like. Been a little bit long-winded. We've seen, a short covering day on Thursday, perhaps another short covering day on Friday. Overnight inventory is holding short. It opened with a gap and has almost instantly closed the gap. If we look at the 1 minute chart here, opening out of range and out of balance from the previous day offers a potential opportunity for an opening range trade. So we really got a good one here today. 33 tick opening range, which has already provided more than 100 ticks of opportunity to the upside. So this was a good one, and it's important to remember when we open out of balance from the previous day, from the previous session, especially when we have overnight inventory to the short side, this opening range trade can really provide a decent, really quick opportunity if it works. If it doesn't, that's something we have to deal with, is the amount of risk in that opening range trade. Today, the amount of risk was about 35 ticks. But it's already paid more than 2 to 3 times that. Look at that. It's continuing to get up there. So now we've opened out of range. Now we have a potential value area special situation play where if we come back into value from Friday and accept value, price could move all the way back to the high of value at some point during that session. Boy, oh boy, what a move. Man. What a day to miss the opening range trade. Look at that. Pow. Jeez. I am sorry. All right, let's move on. We had a really good opportunity there in that crude oil trade. We missed it, but that's okay. There's going to be lots of opportunities as the day goes on. All right. All time frame structures remain lower. It's very similar to the E-mini S&Ps. An inside day so far in extended trading hours between the range for today and yesterday and Friday's range, indicating potential short time frame control. We're in a kind of a similar situation here, and we are kind of finding an area where the market is finding two-sided trade for now. Here's the 30-minute overnight shorts in range, patience, settlements all the way up here, 12,152 even, last week's high, 12,211 looming above us, last week's low, 11,389 quarter. Now, a little bit different. We've got a little bit of a gap down below here. There's a little bit weaker structure here in the Nasdaq. We've got this naked point of control, and we've got this naked point of control to look for as far as visual opportunities to the upside or to the downside. On the upside, there is some space above last week's high, above this swing high, if we can get there. Take a look at gold. So, boy, you guys took this thing apart on me last week, right? I guess the strength of the U.S. dollar really put a whammy on some of these hard assets, of course. Volume was relatively slow after the move to the downside. We're finding an area of balance. Looks like, in essence, a dead cat bounce here off this low. We've got day 3 in an area of balance. That market just kind of digesting what happened last week. It seems it's got to be a big energy, increase. Volume wasn't all that great to the downside. Yeah, Friday we added 5,700 in open interest. What did we do on Friday? We had a big range. The market, I think, kind of went from lower to higher. My goodness. And maybe it's because I haven't been talking that much. Just been relaxing. But in range, in value, no big shakes as far as opening range trades, anything like that. Overnight inventory to the short side without a gap inside regular trading hours, value high, value low, last night's high, low, last night's high, everything lining up for potential continuation of range-bound trade, and watch the extremes of the range overnight. Well, last week's low and the high from Friday lining up relatively well with value high from the big down day. I'm looking at this as an opportunity to sit, wait, and look for better opportunities as the day or the week goes on. I'm not seeing that there's anything that's tremendous or worth the risk here, except for the potential overnight inventory adjustment. The market opened here. We had traders getting shorter and short time frame. They're looking for continuation to the downside. If they don't get it, they can scare this market back up towards settlement, which might be one of the opportunities that we might find here in gold. And that's not that's nothing to sneeze at. That's 10 points. It's $1,000. $10 bucks. To the euro, boy, oh boy, the U.S. dollar just continues to roll over everything. We've got last week's low, weekly kickoff low, already usurped to the downside here. We added 2,700 in open interest on Friday. Looks like that open interest was kind of met short covering on Friday. We can see this in the 30-minute chart we're going to check out soon. It acts as though this push off the low here, we may have trapped some longs from over the weekend that seem to be getting out. Of course, we know that our structure is to the downside. Here it is. So, the movement on Friday was to the upside. So it indicates, number one, short covering, and number two, with the increase in open interest, new longs. Well, those new longs are currently getting smoked. Overnight inventory is to the short side, and the overnight inventory position, the overnight inventory position is continuing to get paid. So they're going to dig their heels in. Last week's low and weekly kickoff low is going to be pivotal for that. I don't want to try and fight this move to the downside without some sort of structure. Whenever there's a big move, yes, there's going to be an end to it. To be able to pick it out in real time with no structure is going to be more luck than anything else. So I want to fight this move. If we can't accept below last week's low / weekly kickoff on a move back to it, it might offer a good opportunity. But I'm not going to be picking bottoms in this market. Let's take a look at the 10-year, which seems to almost be setting up another bull flag. Looming interest rates hike and putting up a bull flag. Volume is pretty good. Not tremendous, but holding up relatively well on this move to the downside. We had a bull flag here. Very low volume. Okay, this is, of course, a holiday. We had a bull flag here. Very low volume. Bull flag here. Volume seems to be a little bit better. We did lose 5,800 in open interest on Friday. Last week's low. $117.18 last week's high. 120.16.5. Opening in range, in value. Overnight inventory to the long side. Overnight not able to take out last week's low. Short time frame levels. If this is going to be a bull flag, we're at risk, I think, of potentially taking it out right now. Hang on a second here. I'm going to start this bull flag about here because we've got some points of contact here. 1, 2, 3. This looks like an interesting spot here. I don't think it's much to lean on, but that's just me. And the natural gas. Alrighty, so we've got a bipolar market here, I think. It's up one day, down the next. There's so much news, so much depending on it. We added 2,700. We lost 200 on Friday. Friday was just a rest day, it seems. Now we're taking out last week's high, the market pushing to the upside. What are we looking at? We had short inventory in the overnight. The market opened 8 o'clock. Looks like leaving the opening range, the low of the session, creating a gap. And going with the gap. This looks like much like a gap and go. We've got some visuals and important inflection levels above and the high of the weekly kickoff levels, 6.83, $6.83. We've got a naked point of control above that that goes a little bit further back. Down below, naked point of control. Opening with the gap and going like that. Again, I don't want to step in front of this. Excuse me. My goodness. All right, so we don't want to step in front of this. If I'm going to be looking for opportunities to short, I need some sort of structure, and weekly kickoff high could provide that structure. And we're going to have to see what happens here. I am always thankful that I don't trade this market. It is such a beast, and it was requested that we take a look at it, which we added, and I've become somewhat enamored by it, but also trying to remain very respectful of the risk in this market because it is a tough one. Okay. All right, so David, no, I don't use the 1 minute to execute. The only reason I put up that 1 minute chart is for the opening range trade. Now, there's different people that look at the opening range trade in a little different ways. I mean, some people say the opening range is 30 seconds. I say it's a minute. I know people that use 5 minutes and even longer periods of time for an opening range. But just for the opening range in the crude oil, David, I just put up that 1 minute chart because as we saw, at least today, in that 1 minute chart, that 1 minute bar, that 8 to 801 bar, remains the low of the session in crude oil so far today. So that can be an indication of buyer control right off the opening bell. But as far as trades I'd like to hold for 3 days, like for intra-week, also for day trading, do you execute of those on the 30-minute chart as well, or do you drop down when it comes to execution? I usually try not to do that because, again, my information is market-generated information created by the market profile, and I don't necessarily hold positions that long at all. I'm a day trader. I like to sleep. I like to disengage when I'm not engaged with the marketplace. Not that there's anything wrong with holding onto positions for longer periods of time. There are times when I will do that, but there's got to be some specific situations when that happens. And of course, I can protect myself with the stop. Excuse me, as always. And again, I apologize for coughing all over this today. I don't know what's going on. Anne-Marie, it's good to be back. Feeling great. I don't know what this tickle is, but when it happens to all of us, I know that. So, all right, let's take our deep breath. We're getting a little long here. Stay humble, grateful, and creative today. Thanks for joining me again. Thanks, JD, for watching everybody for us. And apple cider vinegar will kill. I'm going to try that. I know I have some here, so we'll look forward to taking care of that. And tomorrow will be a much less coffee day, I guess. Get out there and profit today. I'll see you in the proverbial trading pit here in just a couple of minutes. And remember, no group coaching today. We got the strategy classes, so we're going to take a look at those. And of course, group coaching will be back next week. We got Make Hogue Money tomorrow at its usual time, and I look forward to seeing everybody back here today for the market recap. We'll see what happened and get a little bit deeper into this week's chapter in trading in your week, in your year, in your book of trading. So, looking forward to a good week. Great to be back with everybody. Love you. Trade well. Be good to yourself. Be good to others, and keep praying for peace. We'll see you in a little bit. Trade well.